Hey everybody, this is Jim at SP500chart.com, where we use time-honored techniques to understand modern markets. At least we try to. But we definitely feature daily technical analysis videos of the S&P 500 index. And we use old school techniques. We don't use moving averages that much. We don't use MACD. We don't use crossovers. We don't use Ishimoku origami clouds or origami clouds. I'm just making this stuff up. But the stuff that I don't make up is what we do, and that is using time-honored techniques to try to understand modern markets. I say try to because it doesn't always work. It works an amazing amount of the time, as those who have followed the website and these videos can attest to. And the fact that I keep getting more and more subscribers and they keep sticking around, and, you know, I'm not really doing that much to promote this site, but it's just kind of building on itself. But before we take a look, I need to remind you, as always, because it doesn't work all the time, the website and this video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I might add here, past history is not indicative of future results. Look, I can draw lines on charts, but you have to draw your own conclusions from your own research. And then after you do all that, you have to make investment decisions that are suitable for your personal financial situation. And I'll add to that. And it also should be suitable for your personal emotional situation. You might make a perfectly good decision, but have no tolerance for pain, and the second you're 3% down in a trade, you bail. You know, you don't need to be trading stocks if you're going to bail after the market moves 3% against you. It's just a fact, as I see it. But let me add this. I am not a licensed financial professional, so how I see it isn't that important. I'm just a guy who draws lines on charts. Here we go. Okay, guys, we are looking at a daily chart of the S&P right now, and I want to show you this for I think is a pretty interesting reason here. I'm going to move this little guy right here because I've talked about a concept before that I've never heard any other chart analyst. What am I talking about? Chart analyst mention. And that is this idea, what those of you who've been around me for a little bit will know what I'm talking about when I say the term fish bones. Okay, I want you to not think about the chart right now. I want you to think about when you eat a fish. If you ever had the pleasure of catching your own fish, maybe you got some little small brim and you fried up a bunch of them in the pan, and you start to get your fork and you kind of tease that meat away from the back, and you stay away from the belly area, but you pretty much clean that bone as much as you can, and you enjoy that little fish dinner. And what you're left with is the fish bones. And you'll see that the size of those little ribs that are near the belly of the fish are longer. They're also thicker, and they occur at an interval that's pretty easy to recognize. As you get towards the tail of the fish, those bones start to get shorter and thinner, and often they will also occur at a smaller interval. So that's what I'm talking about when I'm talking about fish bones. That sometimes in a long and drawn-out pattern, or sometimes in a less drawn-out pattern, you start to see that there is a difference in the intensity of swings, there is a difference in the strength of swings, and there's also a difference in the timing of the swings. So if we back out on a 2-day chart of the S&P, what I'm talking about here is, for example, the move from here to here took a long time. Then we had, and this, by the way, this pattern that set this move up was an inverted head and shoulders pattern that bottomed out on the 9th of March 2009. Okay? Then we had a reactive move. Then we had still a pretty good sized inverted head and shoulders pattern. Okay? But not as big as this one. And it created a move that was, well, not as big as this one. And it made a head and shoulders top. That head and shoulders top made a pretty decent sized move down. Then it made another pattern that then made a smaller head and shoulders top. And now we've come down and we've made a smaller inverted head and shoulders. You see what I'm getting at. Here's 1, 2, 3, 4 inverted head and shoulders, each one smaller than the previous. Here is a head and shoulders top, and another head and shoulders top, and maybe another head and shoulders top. And I'm making my voice get a little bit more faint because what's happening is we're seeing a decrease in the amplitude. We're seeing a decrease in the results. We're seeing a decrease also in the timing. Okay? So I just find that really, really interesting as we look at the chart here. That's what I'm talking about when I say fish bones. It's as if we're seeing these different structures take place, and while these structures are taking place, we see that as we get near the end of what may be a larger pattern, we see that everything starts to just kind of become less and less. Additionally, when you have fish bones, you also have a spine. And if we take this top red line that is pretty much our long-term resistance line drawn over this top and this top, and you could even say hypothetically sort of over the highs that were in place in late 2008 before we got this set up this last tumultuous sell-off. In other words, this little recovery high right back here. If we draw that line and then we draw a line that's underneath our last two major bottoms, which I would call the 3.9 bottom of '09 and then the 10.3 bottom of 2011, then you can see that here's that line and that line. It creates a rising wedge pattern, okay? And if we bisect that pattern roughly, not exactly, you can see we get this little spine that seems to have some technical significance at a number of junctures over the past 3.5 years. Okay, but let's take a look and see what happened today. As I was kind of expecting, we yesterday back tested this green line, which was a broken support line. Not really a major line. We really only had a couple touches back here, but that broke. We also broke this red trend line that had a number of good tests prior to its breaking. Yesterday we got momentarily over that to end up testing this green line, but today, as you can see, this moved around just a little bit. There we go. You can see we got over that red line just a little bit yesterday, and today we couldn't get back up to it. As a matter of fact, I pointed out what looked to be a very small broadening top formation right here. Very, very small, just formed over almost not quite 2 days. This is a minor pattern. But you can see that today's rally off the day's lows, we might look at that as being a back test on that broken little rising support line here. And guys, I still think that that this market needs to come down and needs to test some levels. But here's the trick. If we come down to this 1398-ish, 1399 area, and if we take this level out right here, then we are likely setting up a move that would take us down to about 1370. And if that happens, that means by necessity we will take out this rising support line and we will take out this rising support line. And if that happens, then we really don't have much support until we start getting down into the 1320s. That's just kind of the way I see it. And that's the way the chart seems to be portraying things. But I mentioned yesterday that this market presents us something, and I didn't say this word in the video, but I did in the notes that accompanied it in the subscription area of the site. This chart right now kind of gives us a little bit of a bull-bear Rorschach test. You know, Rorschach test is also known as a, quote, ink blot test. That's where the psychiatrist shows you what he says is just an ink blot where a page has been folded over, and you have this symmetrical thing that you look at, and one person says, oh, that's a butterfly, and another person says, hell no, it's a bat. Or one person says it's an angel, and another person says it's the face of Satan. And it's all there to help divulge, to see what your subconscious is up to. Well, I say this is kind of a Rorschach test because we got this larger potential head and shoulders top that we're looking at with a neckline around 1399. And then we have this smaller potential head and shoulders inverted pattern that could serve as a continuation. The question is, which one is going to do what it's supposed to do? Well, obviously, if we break 1399, then that would confirm the head and shoulders top idea, and we would expect to move down to the low 1370s, and probably lower. If, on the other hand, we get up over this level right here with a good convincing move, and that level's about 1416 or so, then you expect to move to the mid to high 1430s. So guys, that is where we are. I suspect, I just get this feeling because we have support here and it looks like we have resistance here. My guess is the market may just tease us for a while and go sideways for a bit. Okay? So, but whichever one of these lines goes first, that is the trigger for us to look for an expected move. If this line gets taken out, and I say that if we also take it out, this line would have to get taken out fairly quickly, okay? But that would set up a move to the mid 1430s minimum. If this line gets taken out to the downside, then we're looking for a move to about 1370 minimum. Again, probably more than that. I do want to add, though, if this does end up being a head and shoulders top, I find it kind of interesting that level that we would be hitting at about 1370. Oh, and by the way, how do we get that level? Well, we measure the height of the pattern from the, in this case, what I would call proposed neckline. Okay, there's the height. And then we take this line and we measure it. And since this line is nearly horizontal, we can pretty much put this on here at any point to get our target. And again, that takes us to roughly 1370. What I was going to say that was kind of interesting is if we snap a line to roughly 1370 and we follow this back, you can see how we're not too far from where one would expect some possible gap support. And I remind you, what is gap support? Gap support in this case would actually be more around 1364. But what is gap support? Gap support is when the market gaps up or down, essentially running away from somebody who sold prior to the gap. In this case, because they would have sold down here, then the market all of a sudden starts to move up and get away from them. If they are disciplined enough not to chase, then they likely would be lying in wait saying, you know, I'm going to be patient here, and if the market comes back to where I got out at 1365 or the low 1360s, wherever this is back here, then, you know, I may entertain the idea of jumping back in. So that is why you tend to get gap support. And for the opposite reason, that's why you tend to get gap resistance. The opposite reason would be if the market gaps down on you and you didn't get out, then you would have a tendency to think, gee, if only I could get out for where it was 3 weeks ago or 2 weeks ago or last week, if only we could recover back up to that area that was trading before the gap down, then I'll get out and be happy. That's why when you get recoveries off of gap downs, they tend to turn down at that gap resistance level, and that is why when you get sell-offs after a gap up, they tend to recover at the gap, at the level that was in place prior to that gap up. So guys, basically to make a long story short, we got two levels to watch. 1416, if that gets taken out on good volume, then look for a decent ride up of 20-25 points minimum, and possibly all the way up to this 1444 level. There should be pretty strong resistance up here. If, on the other hand, the market takes a nosedive and we take out 1399, and you could say 1400, take out 1400 on conviction, and the market should continue to fall for at least another 30 to 35 points, probably more, because I don't think there's much to hold the market up other than this potential gap level until we were to reach some areas down here where we would hopefully find some better reasons for support. And as a last-ditch thing, if we're looking at this daily chart and we're looking at where things, you know, could potentially end up, you know, we have a level down here at this red line that is in the high 1200s. That is the line that I showed you a little while ago that's drawn from the 3909 low across the 1003 low of 2011. And guys, if that gets taken out at some point, and you can see with the kind of moves we've been making here, that is not out of the question. You look at this dive right here. You look at this right here. If we experience something on that magnitude again, we could come down and test that red line. And if that does get taken out, then we could be looking potentially for a move down to the 1120s. And I'm not saying that's going to happen, but I'm saying don't get complacent. If the market takes a real turn to the downside and we get down to the 1120s, then that area has to hold, because if it doesn't hold, then guys, we would, for the first time in a while, we run the risk of setting a lower major low than the one that occurred previously. And if that's the case, you start to look at the possibility that this market may have topped out in the 1400s and failed to reach that 1600 level that I still think currently is still in the realm of possibility. But you got to watch this really carefully. This brown level right here, if we go to I think a daily chart, you can see that line is the resistance line defined by the top of this head and shoulders pattern and the top of this head and shoulders pattern. And that should be something of significant technical importance. But if this 1440 were to break, I would probably say be looking for 1600. Okay? If we get over this line right here and it's a clear break, I'm thinking look for 1600. If on the other hand we start to fall down and start to mess with some of these support levels in the low 1300s and then the 1270s, then we have another picture to look at altogether. But right now the good news is we have a potential head and shoulders top that we should be able to trade off of if it is confirmed, and we have a small inverted head and shoulders that we should also be able to trade on if it is confirmed. But while we are between 1416 and roughly 1398, neither of these patterns is confirmed, and we may be subject to just some sideways wishy-washiness. So guys, I appreciate you taking time out of your day to watch the video. I want to say hello to some new subscribers. Thank you. I hope you enjoy these videos, and I hope you take it all in stride. This stuff never works 100% of the time, but it's pretty decent. It's a pretty decent way to learn how to analyze the markets. Thanks again. Take care.